What's up? This is Ryan with Planet Cheapskate. In this video, we are going to be discussing what buying points on a mortgage rate is, how it works, and whether or not it's a good idea for you. I'll also provide some specific examples to assist in fully understanding the technique. Now, be sure to also stick around to the very end of this video for 3 valuable loan hacks that will give you insider tips on how to reduce your rate without even needing to go through the process of buying down your rate. But first, I'd just like to take a very brief moment to personally invite you to subscribe and join our community. I do a home loan rate update every Friday going into the weekend, along with new video releases on Thursdays, helping you manage through the world of credit, real estate, and home loans. Also, when you do subscribe, be sure to hit that little bell and it will alert you whenever I release fresh content. Now, with all that out of the way, let's dive right in. Before we get into buying points to reduce your mortgage rate, we first need to understand what your interest rate is and how it affects your payment. The interest rate on your mortgage will determine how much you pay each month and over the life of the loan on the total dollar amount you borrowed. A good way to look at your mortgage interest rate is to just consider it the price of borrowing the money that you need to make the home purchase. Your mortgage interest rate is determined by many factors, including your credit score, the amount of money you are borrowing, how much you're putting down as a down payment, and the amount of reoccurring monthly debt obligations compared to your consistent monthly income. So when you're shopping for a mortgage and comparing interest rates, you'll have the option to buy points to reduce your mortgage interest rate. This can sometimes be bad or good, depending on your situation. Points, or also known as discount points or mortgage points sometimes, are a form of prepaid interest. When you buy points, you're paying a certain amount of money up front in exchange for a lower interest rate on your mortgage. Each point is equal to 1% of your total loan amount. So if you're taking out a $200,000 mortgage, 1 point would cost $2,000. When you buy points, you're essentially paying more upfront in exchange for a lower interest rate. The more points you buy, the lower your interest rate will be. When you buy points, you're essentially paying more upfront in exchange for a lower interest rate. The more points you buy, the lower your interest rate will be. Here's an example to help you understand the concept better, but please understand that your results could vary. Let's say you're offered a 30-year fixed rate mortgage at 3.5% interest rate, APR 3.625. If you decide to buy 1 point, the interest rate on your mortgage would drop to 3.25%, APR 3.375. And if you decided to buy 2 points, the interest rate would then drop to 3% APR with an APR of 3.125. It's important to keep in mind that the more points you buy, the higher the upfront closing costs will be. However, the lower your interest rate will be, ultimately saving you money over the life of the loan and on your monthly payment. Understand that buying points on a mortgage rate can be a very good idea for some people, but it's not for everyone. It really depends on your individual situation and goals. So is buying points to reduce your rate a good idea for you? Well, that depends. There are a few things to consider first. First, you need to consider how long you plan on staying in the home. If you're only planning to stay in the home for a few years, buying points may not be worth it. The upfront cost will be higher, and you may not be in the home long enough to recoup that cost. Second, you'll need to consider your budget. If you're able to afford the upfront cost of buying points and you're comfortable with the monthly mortgage payments, then it may be a good idea. Lastly, you should compare the cost of buying points to the cost of having a higher interest rate over the life of the loan. You can use a mortgage calculator to help you make this comparison, and I'll put a link in the description of a very good mortgage calculator. So wrapping things up, buying points on a mortgage rate can be a very good idea for some people, but it's not for everyone. It's important to consider your individual situation and goals when deciding whether or not to buy points. So as promised, 3 amazing loan hacks that will help reduce your rate without ever needing to pay points to buy down your rate. Loan hack number 1 is something I am always preaching. Shop around for the best mortgage rate. One of the best ways to get a lower mortgage rate is to shop around and compare rates from different lenders. Shopping around can help you find the best rate available and can potentially save you thousands of dollars over the life of your loan. The best and easiest way to shop around is to use a local mortgage broker such as myself, as we can help you shop around to multiple lenders and make them compete, all with just one credit pull. Loan hack number 2 is to improve your credit score. Having a higher credit score can help you qualify for a lower mortgage rate. Lenders look at your credit score as an indicator of your ability to repay the loan. If you have a higher credit score, lenders will view you as a lower risk and will offer you a lower interest rate. And loan hack number 3 is to make a larger down payment. Making a larger down payment can help you qualify for a lower mortgage rate. A larger down payment can lower the loan to value ratio, which is the amount of loan compared to the value of the home. A lower loan to value ratio can help you qualify for a lower interest rate. So there you have it, everything you need to know about buying points on a mortgage rate, how the process works, and whether or not it's a good idea for you, along with 3 amazing loan hacks that will help you reduce your rate without ever needing to even consider buying down your rate. Please leave a comment below if I missed anything or you have any questions. I'd love to hear from you. And listen, if you gained value or knowledge from this video, do me a huge favor and smash that like button so more people just like you can see this info. And if you liked this video, I'd like to invite you to watch one of my other videos. Over here, I explain, break down, and hack every major home loan. And over here, YouTube has determined that you may enjoy this video. Thank you for tuning in. Until next time, best of luck.